You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of analysis, a little bit of unusual activity. Throw in some listener questions, a little bit of peering ahead into the future, and then mix it all together, and you have the delicious stew that is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing around here we like to call Ye Old Options Insider Radio Network. I'm sure most of you are familiar with it by now, but I'm sure a lot of newcomers coming into the show all the time. And if you haven't figured it out right now, there's a whole universe of programming we have out there available for you. Not just the 400-plus archive episodes of the Option Block, but also myriad episodes looking for a financial advisor. We have episodes for you, the advisor's option, want some more basic options education, well, options boot camp, and of course the options playbook are the shows for you interested in futures options. Well, futures options roundtable and the long and short of futures options that we do over there with the folks at the CME. If you like more of the volatility trades and VIX is your bag, well, then Volatility Views is, of course, for you. I mean, it just goes on, endless. And, of course, interested in all the cool stuff coming out of the big options industry conference last week. Well, we've got that up for you as well. In fact, most of that is already starting to hit the tape as we speak. Keep an eye on the network feed or our website, or just subscribe to our special events program to get all of that great conference goodness. We've already got all the exchange updates up there, and some of the panels are starting to hit it as well. So stay tuned for that. Many hours of goodness coming out of the options industry conference for you guys to enjoy as well. Of course, you can get all of that at our website and indeed via our mobile app, which is available pretty much in every app store you can think of, even the Amazon App Store. We haven't forgotten you Amazon folks out there. All right, and joining me on the old All-Star panel today, bit of a truncated panel, but none the worse for wear. I am joined by the always affable Uncle Mike Tusaw from RCM Wealth Advisors, RCM Asset Management. Uncle Mike, welcome back to the old Option Block program, sir.
Always great to be here, even if it is a bit truncated.
A wee bit truncated, but none the worse for wear. Are you ready for a fun show, sir?
I'm always ready for a fun show. This is something that is extremely fun. I don't see what could possibly be any more fun than sitting around talking about options for an hour.
Indeed, that is the case. So without further ado, let's dive right into it and start off the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down what was moving, what was shaking, what was catching our eye on the old street today. And for all of you out there playing the home game, I always forget to give you the date, so kicking things off here, we are recording this, of course, on Thursday, May 14th. You guys are listening probably on the 15th in the morning, or whenever you guys tune in. We welcome you guys many weeks, months, and indeed years down the road. I've seen the numbers. I know how many of you guys come in well down the pike. So we welcome all of you to the Option Block program. And today was a bit of a rally ho mode on the old street. Most of the major indices closing well north. In fact, the S&P closing up about 1.1% on the day. The Qs, the NASDAQ up about 1.5%, so leading the charge to the upside. The Dow up about 1% on the day. Of course, the VIX cash, not surprisingly, coming off about a full handle to about 12.77. Uncle Mike flirting there intraday with some all new highs there in the old S&P. So let's kick things off. I'm sure that was pretty much where your attention was glued. And is it indeed the best time to sell stocks ever in their history of recorded time?
You took my thunder. There's never been a better time in the entire history of the stock market to sell than right now. Yes, you are correct. We actually did get through the number that I've been watching for a while, 2120 on the SPX. We never this is the highest all-time close, I believe, but nonetheless, we didn't really break it by too much. So for now, what I'm looking at is so long as we don't gap down tomorrow, if we're up a little bit at the open tomorrow, I will likely be creating more deltas on SPY. So I'm excited about it. I think that it's a great time in the market because of the fact that we are at all-time highs. And if you want to buy protection, i.e. put options, or just buy a few calls, they're really not that expensive with a VIX below 13. Obviously, the VIX can get lower, and as can the market, and the VIX can get higher as well. But nonetheless, I really like this combination for being a bull and just riding in the breakout.
And aside from the ever-moving yardstick milestone that is the new record highs on the S&P, what else was cooking in your neck of the woods? Apple, of course, the beloved major holding for many of your clients, having another decent day, outperforming the market to the upside yet again, as it is often wont to do here, closing up about 2.3% on the day. Also seeing a bit of a rally in gold as well. GLD, the ever-popular gold ETF, up about 0.5% on the day. So all in all, S&P rallying, gold rallying, Apple rallying. I'm guessing it was a pretty happy day over there in Uncle Mike land.
Hey, there was a whole lot of grinning going on, mostly by me. But with Apple, just full disclosure, it's not a major holding for a lot of clients anymore. It's still a holding, but it's probably more of a minor holding at this point. So with Apple, I would say the days of me describing in detail all these complex and fun hedges, at least for now, are done. But nonetheless, if Apple does pull back again, I won't be shy about getting back into it. So we have that. Gold's been having a nice rally lately as well. Silver's been doing pretty well. And so just basically on that one, if we come up a little bit more with gold, I'll be rolling the put up. But the other thing that kind of caught my eye today that I guess we've been talking about on the show quite a bit lately is, once again, bonds. It didn't really have a very big day today, but it has had a pretty nice little downward rally, or downward plunge, whatever you want to call it, over the last couple of weeks. And so there's all this talk about, is the Fed going to raise rates? Is the Fed going to raise rates? Well, it just kind of seems like the traders, and I think he mentions this a little bit in the show notes today, but one thing I was thinking too is that a lot of the traders are the people that are holding these bonds, whether they're long or short, whatever. Well, the shorts, I guess I should say, more so than the longs, but they're basically sticking their tongue out at the Fed saying, we're going to raise rates first.
Yeah, rates, of course, on a lot of people's mind these days. I know you and Mark were talking a lot about TLT on the last show, and of course that's another one we're watching. But also we're seeing, treasuries rallying. Of course, it seems like everything's in rally mode today. Apple, S&P, gold, treasuries across the board. It's just a good day to be bullish on anything. Apparently, S&P hitting not the dollar, of course, the dollar retreating a little bit today, at least the dollar index off a little bit today. But what's interesting, of course, going back to the debt, is looking at a lot of analysis coming out of what we're seeing on the Treasury futures and what's going on out in that neck of the woods. And of course, we here on the show, we've said many times, we tend to put a lot more faith in the actual money that's being put at work, the capital that's being committed in the marketplace, rather than analyst projections or economist projections for what the Fed is going to do. We say the same thing around earnings times. Look at the straddles. That's real money as opposed to what the analysts are jibber-jabbering about there in the ether. And forget about the economists here looking at what the futures are implying for the Fed funds rate going forward. And there's a lot of talk that the Fed would probably move, at least at the beginning of this year, by the end of 2015. It's certainly looking like the June meeting is probably not going to be the starter. Some people were still having a little bit of hope for SEP, if not by the end of the year in December. And now looking here at what the futures are implying, they're implying out to December about a 0.3% Fed funds rate, that's the lowest we've seen pretty much all year for the DEES timeframe. That's also about half of what the forecast was going, that the Fed actually gave us back in March, what they forecast back in December. So the market is actually saying the heck with some of the rumors out there, the heck with some of the innuendo that the Fed is putting out there. We're committing real capital to saying, hey, it's actually going to be about half what the Fed is predicting. So you're right, Mike. Rates are pretty much where the action is. I know you like TLT, Mike. You like a lot of the ETFs. Do you ever flirt at all with the big futures and the futures options out there for the treasuries?
Well, not a lot of people know this, but my all-time favorite webinar title used to get rejected from back in my days at a previous firm, jump on the boat with a 10-year note. So I've done a lot of 10-year note trading through the years.
Second only to your Stupids webinar, of course.
Well, the name, though, the name is really cool. They said that at that old firm, they said that it wasn't, they rejected the title. They didn't like it as much as I did.
Is it a compliance thing or they just found it distasteful?
I think they just found it distasteful. So I told them I found them distasteful. It bothered me.
The heck with you. I'm out of here.
Yeah, pretty much. That's the whole reason I changed careers. They wouldn't accept jump on the boat with a 10-year note. I don't know how much better of a title you can get. But anyway, at this stage in life, when I'm just working with a lot of clients in their IRAs and securities accounts, not doing anything on the future side, but I have traded many 10-year note contracts in my day for both futures and futures options.
And are you on board with all these Fed traders essentially saying, yeah, the Fed's screw the Fed. We're saying it's actually going to be about half what they're predicting out there.
I could see that. It just predicting rates is a very difficult and shaky thing because the second the Fed comes out, you're going to, let me rephrase that. Trying to predict rates can be a very volatile thing. So in general, if I were to play that game or try to do that, I would be more of a premium buyer because of the fact that you have some type of limited risk on it. I wouldn't want to be trading futures on that, and I for darn sure wouldn't want to be trading naked options if I'm trying to trade a prediction as to what the Fed is doing. I'd stay either cash secured or a spread of some sort. But for the most part, I think it would be a good time to be a premium buyer right now if that's something that you're trying to predict.
Well, speaking of premium buyers and also some premium sellers in this case, Mike, we have to turn our gaze now to my personal favorite story of the day. This actually is probably one of my favorite stories for a while. Just in terms, if it plays out as it's appearing to right now, this is some breaking stuff from the market. This definitely gets points for one of the more brazen scams I've seen going on in the marketplace for quite a while. If you guys are following the market at all today, and Mike, I'm sure you saw this as well, you saw there may have been a little bit of movement in good old AVP. And no, I know what you're thinking. What does Alien versus Predator have to do with anything? Not Alien versus Predator, of course, that fine series of movies, but indeed Avon Products Inc. They started off the day, a bit of an interesting day for them. They were trading around the 7 handle, high sixes most of the day today. And then intraday, all of a sudden, some rumors started percolating the day. There was a buyout offer and that Avon was in play. And it was a substantial buyout offer to the tune of about 3x or nearly 3x where the stock was trading. So stock, as you might imagine, took off to the races, about 20%. I believe it got up from about the 6 in the orders or so up to about 8 before it got halted. And as you might imagine, we saw a flurry of paper going on as a result. But then the best part was what happened afterwards. So then after the halt was lifted, we saw some people digging in. Then there was indeed a filing with the SEC, a firm listed as offering $18.75 a share for Avon with the SEC. They actually filed with this, and that's, of course, what sent the flurry going on in the stock. As the day went on, people are starting to realize that this may not have actually been a legitimate filing. They noticed some spelling errors. They referred to the reported bidder with incorrect terminology. They named a law firm that didn't exist. A lot of errors, pretty much. This document rife with errors. And of course, the price being so extravagant, nearly 3 times the price of the trading thing. Clearly, this was intended to give a bit of a jolt to the marketplace. Before we get into some of the options paper, we saw a lot of paper going off out here. Mike, I've seen a lot of insider activity in my day. You know, we do a lot of unusual activity here, but of course, in my time on the floor, I saw a lot of, shall we say, dubious trades going up. A lot of them were very brazen. I can't remember ever seeing someone actually going through the length, the extent to put a fake filing with the SEC that they were launching a tender offer for this firm. That takes Brazen to a whole new level. Did you follow the story at all today?
Didn't follow it too closely today, but what's interesting about this is that it's not an insider trade. It's someone breaking into the inside through the SEC so they could do an insider trade.
Yeah, so the obvious question here is, you know, what was afoot in the options, and usually it's where the options plays were that they had on ahead of this, because clearly they were expecting a big gap in the underlying. When they put in an offer 3x, you expect the underlying to gap up clearly. And we did see a lot of paper here in AVP today. This is the name that averages about 11,000 contracts a day, doing 80,000 today. And of course, once that rumor came off, the stock popped first. Once the rumor came off, of course, and once the halt was lifted, the stock drifted back down again, down to about 7. It actually seems to have recovered a little bit today. Surprisingly, it's still closed around 760, which is interesting that it got a little bit of life back into it, even though this trade seems to have been pretty much debunked. We saw a lot of paper going up. We saw some very, very weird paper. Overall, we saw a bunch of the June 10 calls going up, about 4,000 going up this morning. So that's tens. That's several handles out of the money, as you might imagine here. 4,000 total of those going up. At the time, they're still pretty ugly. Most of them going up paper buy-in for about 25 to 30 cents. As the day went on, this rumor was debunked. Those dropped quite a bit. Now they're a nickel bid at 15. You might be lucky if you could close them out for about a dime. So there's about 20 cents gone 4,000 times. They're a nice $80,000 down the drain that someone spent on specking that this rumor was real. We also saw about the June 8 calls a little bit closer to home, trading about 2,300 times, paper buying the majority of those for about 65 cents. Again, these are trading about half that value now, about 30 cents. So that's another about $60,000 flushed down the toilet. We did see a few savvy people kind of perhaps catching a whiff that something was afoot here and taking advantage of the move to harvest some premium. We saw some savvy fellow coming into the July timeframe and blasting out 1,600 of the July 14 calls. Yes, 14. So those are essentially 2x calls out there for prices about 15 cents. He got some off at a dime. Those are offered at a dime at no bid now. So he pretty much picked up pretty much all of that 1,600 contracts for about a dime to 15 cents. So he did all right there, unless this bid turns out to be true. Even still, I think he's going to be all right. He'll have a chance to hedge before it gets up through the 14 handle. We also saw some other call sellers, the Jan 2016, so a little bit farther out, a little bit farther from home here. 10 calls also trading some decent size today, about 3,600 of them. A lot of them sales, about 2,000 of them going up for 40 cents, and about 700 going up for 70 cents. That was a nice trade. They're actually, with this rally towards the latter part of the day, these calls were very much in the toilet. Now they're looks like about break even on these calls. Hopefully maybe they tried to buy some of these back if they were opening. There's 16,000 open on that strike though, so it is possible some of these sales we saw were closing. Someone taking advantage of this pop to dump some Jan 10s at favorable prices. That 70 cents trade was certainly a pretty decent one. We also saw some interesting put activity out here. About 5,000 of the Jan 2016 puts going up this morning for about $1.50. That was one of the larger trades that we saw and there was a buyer for about $1.50. So that one, you wouldn't immediately intuit that being tied to this story because no one's going to put in a fake story that expects the stock to triple and then buy 5,500 downside puts. That doesn't make any sense. So a bit of a weird one there as well. Overall, it's been weird watching AVP because if you guys have been following along with us on the show and on the website, you know we've been highlighting some interesting, unusual activity in AVP, but none of it would lead to what we see today. There was no flurry of upside call buying. It was all essentially downside puts and a lot of size put rolling. So people have been prepping for a while. In fact, going back to our site till October, of last year, we've been writing about people rolling puts in size out there. So someone has been very concerned about downside. They just did it again a few weeks ago, I believe April 9th. They rolled a lot more puts out there in Avon. So someone has been very concerned about downside for quite some time, including this morning. So a bit of an interesting, we're all kind of parsing the paper to see over the past week or two if there was anything else that went up here in the options ahead of this trade. Everyone's kind of coming up with the same conclusion. There are no real smoking guns. No one came in this morning or yesterday or the day before and said, hey, I need 10,000 of these upside calls. Nothing that we typically see in a trade like this. But still, just all sorts of weird stuff. Uncle Mike, I know that's a lot to digest. But what's your take on this roller coaster that was Avon today?
I've never seen anything like this, quite honestly.
Exactly. This is a good one.
Yeah, because normally if it's just an old school insider trade, it's much more simple than this. And someone buys a bunch of calls or puts right before a big announcement, and that's where you have it, or some type of spread or whatever the case may be. But what's unique about this is that somehow they got this one to the SEC, and the SEC doesn't. It basically says that they duped the SEC is what it sounds like.
Yeah, that's pretty much what it sounds like. Sounds like a pretty hastily concocted document. It doesn't sound like it was very elaborate.
Yeah, it's kind of like when someone figures that the pretty girl in school that doesn't get to go to the big dance because all the guys figure that she's already going with somebody else, but then someone swipes in and asks her out. It's kind of like this, because who would ever think to try to break into to try and fool the SEC to do an insider trade on a company with which you're not an insider on, and somehow manipulate it along those lines. This is probably one of the most fascinating market manipulation style stories I've ever even heard of.
Yeah, you wouldn't think on the surface that it would work. It just sounds too brazen, too sloppy, too obvious almost. and yet here we are seeing a lot of paper, and also weird paper. People buying tons of puts before this goes up. So clearly there's something weird afoot here. If our friend out there buying the puts, hopefully he didn't know this was coming, because if he did, he could have waited a few hours and saved himself quite a bit of money. Either way, this is just this gets filed in the weird trade of the year so far. We have a definite winner here so far for the weirdest trade we've seen for a variety of reasons here on the old show and on the website this year. Of course, it's going to be hard to follow that up, Uncle Mike, but we have to nonetheless. It is our job. It is our duty. So without further ado, let's dive right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome back to the Odd Block. This is indeed the portion of the program where we break down some of the weird, the wild, the woolly paper that is lighting up the old tape today. Going to kick things off with a name we haven't talked about in a while here. This is Michael Kors Holdings Limited, ticker symbol KORS. Closing today, pretty much unched $61.08. And what's interesting about this one, well, a couple of things. First off, we were looking before and talking about, hey, why is there no smoking gun for the AVP trade? Because there was no upsize call buyer. Well, it looks like maybe we're looking in the wrong name. Maybe we just had to be looking, Uncle Mike, here at cores, because this is where apparently all the call action was going up today. In particular, what caught our eye was some size call buy-in here on the June 70 strike. When we started profiling this, it was a 5,000 lot going up on the Philly for 30 cents, going up in one big block. And then as the day went on, that bid increased. And now we saw a lot more volume coming in with about 9,300 total on the strike. The open interest is 9,500, so it does lean heavily toward perhaps closing out of a short. But of course, with that bid jumping in, the jump in implied vol, it could be an opening. I might have to lean here on the closing side of the fence. It's just too neatly wrapped up with a bow for it to really be opening. The OI and the volume today so closely related. We also saw some June 65s going up about 3,000 times for a variety of prices here. It looks like paper probably buying on those as well. So kind of a flurry, a smattering, if you will, of interesting paper out here, mostly on the call side here in good old cores. I just want to pull up the 65s. Yeah, it looks like paper was buying most of those for prices around $1.05 up to $1.10. Saw a 600 lot going up for $1.25 as well. Some of those listed as spreads. We'll have to dig in to see if maybe someone was trying to lag. It looks like we might have seen a 62.5 65 call spread going up as well. Odd that would be going up, maybe perhaps legging into something with the June 70s. Either way, weird paper. We'll have to parse the open interest tomorrow for more activity. That wasn't enough. Also, the June double puts lighting it up, I think 900 times today as well. So a lot of activity across the board. Uncle Mike, A, do you trade cores quite a bit? I guess I know the answer to that, but we can divulge now that you're out of Apple. We can maybe see some other interesting things you're trading. And then B, what's your take on this kind of weird flurry of upside here in good old cores?
Well, a couple things to talk about on that. We do actually, in the RCM Strategic Night Holdings, we do have a small position in cores. So it's one where it is something that we're in, but it's a relatively small position. We're not doing any options on it. But with that being said, a couple of thoughts that I have on this. This wouldn't be out of the question just to be an opening transaction of someone just taking a shot, so to speak, because of the fact that even though it is at the lower end of its range, maybe someone is taking a shot that it might go up 15% in the next 4 weeks. Who knows? But more likely, if this is an opening transaction, I know I say this pretty much every time that I'm on the odd block, this could be a hedge for someone holding a short position, and that maybe they've been short, and a way with which they're trying to take some risk off the table is to perhaps just buy this call option to protect their short with which they've made money on, so to speak. So I think it could be, if it is an opening transaction, my hunch would be that it would be more likely hedging a short stock position on it. And with everything else involved, it could be a bunch of things that kind of makes me think it is probably more likely a hedge in some way with all the other things with which you just mentioned.
Yeah, some weird paper. Certainly not AVP weird, but still weird stuff nonetheless. As we move on to our next name, our next victim here, good old DBA. No, it's not doing business as. That would be fun. But with his PowerShares DB Agriculture ETF, ticker symbol, of course, DBA, closing today. $22.72, up about a third of a point or so on the day today. This is the name that does about 700 contracts a day, doing nearly 10x that, nearly 7,000 contracts going up today. And where was all the love? Where was all the action out here in DBA? Well, it was on the call side, and actually some pretty near-term, near-the-money calls. In particular, was the July 22s. These are actually in the money calls. Listeners, about 70 cents in the money. Going up, paper buying. When we started it off, it was a 2,000 lot for $1. So again, about 72 cents in the money, paying $1. Obviously, a little bit of a 28-cent premium on there. As the day went on, a couple thousand more piling into the tune of 4,200 total on the day. Interesting stuff. Looks bullish. Looks like opening. Actually, clearly it is opening paper. Only 2,400 open on this strike. So this one's a little bit of a weird one. We don't normally see people coming in. When they do come in, they usually, if they do gobble up at the money or in the money calls, usually there's another leg on a spread somewhere to offset that, because clearly you're paying a lot. You're committing a lot of capital to get some of that in the money meat. Maybe you're better off maybe going to the 23s, saving yourself a little bit of money if you are indeed that bullish. But either way, don't see a lot of in the money paper going up in names like this. Clearly, looking here, didn't see any stock with this, so looks like this is, as it appears on the surface, some in the money call love here in good old DBA. Looking quickly here at a chart of DBA over the past few years, this thing could have some room to run to the upside. It hit as high as 29.5 or so about a year ago, back in April, end of April of last year. Since then, it's pretty much been all straight down, down to about the 22 level where we are now. So our friend here perhaps thinking this downturn is over and it's time for DBA to turn on up to the upside, and he's putting his money where his mouth is to the tune of 4,000 pretty meaty July calls. Uncle Mike, what's your take here on both this trade, A, and then B, what's a scenario where you think you would be willing to come in and gobble up this much premium as opposed to maybe one or two strikes above and make it a little bit easier on yourself?
I think it's a couple things, actually. In terms of it, it's definitely, I would tend to bet it's a bullish play, just being a bullish call buyer. I don't think it's a hedge for a short position on DBA. I think that one other thing with which we can add to this is that if someone is bearish on the dollar, they may want to have some type of agriculture exposure, and the hopes that the commodity exposure, this is an area with which the dollar is pulled back a little bit, but maybe they feel that this is an area to where if they're bearish on the dollar, they feel that ags will go up higher. So that it's part of the dollar bearishness that has not taken effect yet, so to speak. Just a theory, but you never know. In terms of this trade, I don't mind actually going with an in-the-money option personally. For this kind of size, I'd probably be a little bit more advanced, but for buying an in-the-money call option, I find no sin in that. And the reason I find no sin in that is because of the fact that volatility, Vega and Theta, volatility and time decay, are the two things that can hurt you when you're long an option. I suppose Rho can too, but nonetheless, let's just worry about volatility and time decay. For the in-the-money section of the option, the intrinsic value, that is 10,000% bulletproof to those factors. So you're getting a benefit on buying an in-the-money option if that's the route with which you choose to take. So I would probably do something more along the lines of a spread if I was in a trade like this, especially I'm just looking at DBA. I don't really see that much upside movement in it, but nonetheless, in the money options are nothing sinful whatsoever. So we'll have to wait and see.
They're the highest of sins, sir. They're not even venal. They're, what is it, mortal? There we go.
Oh, my goodness.
Serious sin. No, of course. You're right. There's no sin involved in this, but it is interesting. I think this is definitely a prime candidate for a spread here. You can do a lot here to take a lot of that premium risk off the table. I know if Andrew was here, he would be shuddering at the amount of juice this guy was buying and not getting it for free in some way, shape, or form. This would be deeply, deeply offensive to him, I feel. And I agree, too. I don't think this is a hedge for a short. You're not going to buy in-the-money calls to hedge a short stock position. That would be an odd choice, to say the least. But, hey, it is the odd block. We've seen weirder things. Write into us. Say, hey, why would you guys perhaps choose to buy an in-the-money call as opposed to maybe at the money or a little bit out of the money, or perhaps doing a spread like this instead? Of course, the reasons Uncle Mike gave are certainly valid. Maybe you have your own reasons. You like to play in the money as opposed to out of the money. So a lot of people write in, do with their covered calls these days, migrating them in the money for a lot of the reasons that we talked about before, getting some of that put juice and all the other fun stuff you get from writing in the put wing. So I've seen a lot of people selling in the money, not as many people buying in the money. So if you do that, let us know. Write in, let us know what your strategery is as we move on to our final victim here in the old odd block. This is one we've talked about once or twice before, the old Healthcare SPDR Select ETF XLV being the ticker. Another good day for this one, about $1 or 1.5% as well, closing at $74 and some change. This is the name, as you might expect, doing about 16,000 contracts a day, so fairly robust paper, doing nearly 2x that, about 30,000 contracts going up today here in XLV. And of that, about almost 30,000, the lion's share of it coming in one massive put buy. It was the June 65 puts going up when we profiled them, one mega block. This is a block of 24,440 paper buy-in for a whopping 11 cents. That's a pretty big facilitation there. Nearly 25,000 contracts. As the day went on, a few hundred more piled in to the tune of about 25,000 total on this strike. Looks like this might be closing here. This is pretty much the one strike anywhere near this range that has some size open interest, actually almost 2x what we saw going up today, about 42,000 contracts open here on this strike. So there is a strong chance that this is indeed closing. There's 47,000 open on the June 70 puts as well. So maybe there was a spread that went up, and perhaps they're coming in to close out the short leg of that spread now, or it could just be straight up close on this strike. Didn't see any stock going up. You don't see any rolling to an additional leg. So it looks like it is pretty much as it appears to be on the surface, someone coming in and just closing out quite a few out of the money puts here, Uncle Mike. If this is indeed what appears to be on the surface, Uncle Mike, then this is the guy actually practicing a lot of what we preach here on the show. You got your shorts. They've come in your direction, in this case, to around a dime or so. Then take them off the table. Would you concur that that's what our friend here is up to?
I think it is. When you get to that level, especially when you have that much size on the table, just to kind of give you guys an idea of this, 1% of the $65 would be 65 cents, as we obviously know on that. So when thinking of this, just to kind of give you guys an idea of what this is actually would be, that's actually I believe 1/7 of 1% in some way, approximately, on that. And hanging out till June to be short for that 11 cents is quite frankly dumb, I think. Now, if this wasn't, I do think that this is a closing transaction, someone just closing out their short, but let's say that this is an opening transaction. The only reason I could think of is someone would want to do this as an opening transaction, to have this type of a hedge on until June, is perhaps maybe they're long the position and they needed to free up some maintenance. They need to free up some capital in some way in a portfolio margin account. By doing that, this could give you the ability to do so, but not by too much, actually. So I really don't see any reason as to why this would be an opening transaction. I see it more as a closing transaction, like you said, and kudos to the person for closing out their shorts.
Indeed. Can't fault them for listening to the show and taking some of those shorts off the table when they've gone your way. Pigs get fed, hogs get slaughtered, as we said many times on the show, and our friend here leaning more piggy than hog-ish. All right. And with that, we're going to bring to a close the old odd block. And now, because it's Thursday, it's time for you guys to take the reins, and it's time to open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block. You guys know what it means. It's time for you guys to make yourselves known here on the old Option Block program. Make your questions and comments known, not just to us here on the panel, though we love to hear from you too, but also to your fellow listeners out there. No shortage of ways for you guys to do just that. Surf on over to the mothership, the flagship, theoptionsinsider.com. Click on that website feedback form or leave us a comment and say, hey, I got a question for the Option Block. A lot of you guys like to do it that way. Of course, you can also find us via email, questions@theoptionsinsider.com, or via social media, twitter.com/options. I know it's a favorite for a lot of you guys as well. And then Facebook, seeing some more Facebook questions. So if you guys are out there on Facebook, give us some Facebook love. For whatever reason, Twitter tends to dominate on social. I don't know why. So if you're on Facebook and you're active, let us know. Facebook.com/TheOptionsInsider, and of course, StockTwits.com/OptionsInsider. A lot of great questions coming in here. Let's start off with one comes from a frequent listener, frequent writer to the show. This is Dmitry S. He writes, hey, some equities have more active options than others. For example, he puts, why is BAC, which is of course Bank of America, so disproportionately more active? Some contracts beat SPY and even VIX on a regular basis here. And I was just pulling up some of the numbers today to kind of confirm his hypothesis here. And again, today was yet another active day out here in Bank of America. This is the name that's averaging about 250,000 contracts a day, so that's fairly robust volume. Aside from some aberrant VIX trades that went up this week, VIX isn't that much more than that. VIX is about 1.5 to 2x that, but still, this is some fairly sizable volume. We saw some paper going up today. It looks like about 18,000 of the May 15 calls, nearly 50,000 of the May 16 calls, and about 20,000 of the May 16 half calls, all going up. So a lot of paper just in May alone today. A lot of love for Bank of America. This is the name that kind of gets derided a little bit as well, about 28,000 here of the June 16s. This is one that was very, very favorable for a long time and still is, to a degree, very favorable with a lot of the HFT players out there, particularly the underlying. The stock is still out there in lists of a lot of names that are pretty popular with the guys out there who are doing HFT. Of course, if you remember our show from a few years ago, we often talk about how the stocks that were like Citi was probably the ideal candidate for this. When it was before it did its reverse split, when it was about $4 or so, it was just being flickered in and out all day long by these guys who were essentially doing what amounts to fee arbitrage. If you've read Flash Boys, you know some of that's going on. Listen to our Trading Tech Talk show. We get into that a little bit as well. But they're essentially looking for relatively calm, relatively quiet names that are relatively low price. So there's not a lot of price risk on this name. And then they can come in and out and do some fee arbitrage and have a relatively good chance of opening and closing on different exchanges without a lot of underlying risk and being able to capture essentially those rebate differentials. One exchange will pay you 35, 40, 50 cents, whatever, to open, and another exchange will charge you 20 cents to close. And so if you can do that effectively, essentially generate a wash trade, you can profit, 30, 40 cents, whatever the case may be. So a lot of that is what we saw in those earlier financial names like Citi. It seems like there still is some legacy activity of that here in Bank of America. The stock has moved a bit. It's about 16.5, so it's not nearly the low name. When it was down around the 10 handle, that's when it really was lighting it up from an HFT perspective. When you have a lot of HFT guys trading the underlying, they're going to filter over into the stock, or excuse me, the options as well. So I think that is still what accounts for a lot of the regular flow we're seeing out here. That said, some of this paper we're seeing today looks like it might be closing here on the 16s and the 15s, which again gets to some of that fee arb stuff we were talking about. But doesn't mean all the paper out here is illusory or it doesn't have any economic incentive. I'm sure there's a lot of it that does. But still, that's kind of the legacy of Bank of America and a few of these other names, that they were very, very popular with a lot of these HFT firms. And I think that's still why we're seeing so much legacy paper up here in this name. Uncle Mike, what's your take here for our friend Dmitry, as well as your take on Bank of America in general? Why do you think it's so popular?
Well, I think that Bank of America is popular just because it just seems like it's one of those names from the financial crisis that everyone still likes to trade. I mean, I'll never forget that they said, "Oh, we'll never get rid of our dividend," and then they got rid of their dividend like a couple days later, about 7 or 8 years ago. But with that, I think the other thing to consider on all this is the fact that Bank of America is around $16 a share, 16.5, and SPY is $209 a share. So there is discrepancy in the amount of contracts with which it is, but the thing to consider is also the size of the underlying itself. I remember when looking at futures options, some clients were looking to go to futures options probably about 8 or 9 years ago, and this is back in my OX days. And I remember just the pricing of them. People are saying, well, why are the futures options contracts so much higher? The cost on the commission so much higher than the cost of the regular stock options. And so the way with which I would explain it was that a stock option, let's say you have a company that's $10 a share, then you buy one call option, you're controlling $1,000 worth of an investment. Whereas on the futures side of it, you're controlling could be up to hundreds of thousands of dollars worth of an investment, depending on which contract you would trade. So that was the justification for the higher price in terms of a futures options versus a stock option. Now, with that being said, I think that also kind of accounts for why we have the higher number of contracts here on a stock that is costing much less than something like SPY. Now, with that, there's also, you can make a case that, well, VIX is only at 12. How come it's beating the VIX? Well, if that's the case, then there's your case for how it has that high of volume on it.
Yeah, I'm just going here through the chart while we're looking at a 2-year chart of Bank of America, parsing some of the volume. And it has remained relatively steady, relatively steadfast from a volume perspective, even as the underlying has kind of trickled up here from about the 12 handle up to the 16 handle over the better part of the past few years. Of course, there were a lot of spikes in volume. Earnings days is going to do about 1 million contracts a day. But, of course, a lot of div plays going on out here. That goes back to that dividend you were talking about before, Uncle Mike, as well. And those could be skewing the numbers a little bit as well. Some serious volume going up, 700,000 contracts or more on some of these dividend play days as well. So a lot of things afoot out here in Bank of America. There's no one answer. There's the price effect. It's still cheap compared to a lot of other names, so that's going to drive some paper. There is legacy HFT people are going up here as well, so that's also going to drive some paper. We had legacy dividend plays going up out here. Not so much anymore. That was kind of more of a legacy trade out there, as well as, of course, the earnings paper and a few other things kind of all stirred into the pot here, which I think accounts for why BAC is still a volume leader. Certainly not like Citi was back in the day when it was just all fake paper. We're certainly not saying that about Bank of America, but there is some perhaps fluff out there in those numbers. Great question, Dmitry. He always writes in with these HFT or related questions, so he must be pretty active on that front. Either that, he read Flash Boys and it's freaking him out like it did a lot of people. Either way, if that's the case, of course, go check out our Trading Tech Talk program. Here's a good one for you, Uncle Mike here. This one comes from Fred D, actually. He's actually a frequent questioner. We do some stuff with the folks over there at Top Step Trader every week, and he's one of our most frequent question askers over there. So I thought I would give him some shine on the big option block program as well. He wrote in this week and said, Mark, I'm nearing the end of reading Natenberg. I've even been going back to some of the basic concepts in the earlier chapters to refresh myself. While I like the book, I don't see much of a trading edge in Natenberg. The market models he uses assume frictionless trades and that volatility is constant. Is Natenberg a good book to get an edge in the market, or do you have another secret book to add to the trader's arsenal? Well, he knows, and everyone listens to the show know I'm a big fan of the Natenberg book. It's kind of my go-to recommendation for your starting point, your starting tome in the options market. But I hope I never described it as the secret weapon in the options trader's arsenal for the reasons he describes. There's a lot of things that are done there to illustrate a point. He keeps volatility constant. He doesn't do commissions, things like that, things that aren't real-world practical examples, obviously. So he's there to kind of educate you on the topics more than give you some sort of secret insight, secret juice into actual trading strategies. That he kind of leaves to your own devices, and probably rightfully so. So yeah, I wouldn't go to Natenberg for kind of the secret weapon in the trading strategy. That, I think, comes at the end of the day. I'm trying to think of any books I could think of that I would recommend that would give you some sort of secret sauce. And there aren't many out there for, I think, a lot of the obvious reasons. I think the best way is kind of, not to be self-serving, but kind of the way we do it here, where we kind of outline a lot of different strategies, a lot of techniques, give you our own real-world viewpoints on those strategies and how they work in the real life. And you could see that for yourself and then take that and apply that knowledge to your own trading, kind of figure out what works for you. Because at the end of the day, if I recommend a book for you, Fred, or anybody else out there that's all about selling premium, and you're more of a premium buyer, kind of a risk mitigated premium buyer, that's not really going to work for you because it's not really your style. So you got to find what works for you within your own strategy, your own risk tolerance, and kind of go from there. Again, this show is a good way to do it. A lot of the free resources out there, including your brokers, have a lot of great education. Also, sites like ours, which is free, the Options Insider, of course, or the Options Institute or optionseducation.org, which is the OIC. All of them have a lot of great free stuff that'll at least kind of get you going on that road. And then, of course, I think we mentioned before on this show, but we always recommend paper trading as well. That'll give you some good feel for how these things actually perform in the marketplace, and also give you a chance to kick the tires on some brokerage platforms, see which ones you like. But that said, I don't unfortunately have a book that I can recommend that is the secret sauce for options trading, unless, of course, you're talking about Uncle Mike's book. Uncle Mike, free plug chance, go.
There you go. The secret sauce. Go long. New option strategies for buy and hold investors, available on Amazon. Feel free to buy that book. But yeah, you're right, Mark. There is no book that's going to give you the secret sauce. What I talk about in my book actually is outlining strategies. And in terms of if you want the secret sauce, I'll just say, call me. I'll tell you whatever sauces that I have, and I'll be more than happy to go through all of those things. But no, you're right. There's not going to be any secret sauces in any book. And like you said, rightfully so, because of the fact that I outline what my strategies are, but my strategies are very active. And so they're also consistent with my own personal philosophies, beliefs, and what have you on trading and investing in general. And it's very difficult to duplicate something like that to another person. Everyone's always going to have their own take on things and their own ways with which to do it. The only way with which I feel that I can duplicate it to other people is to trade their money for them, which is what I do.
Unfortunately for you, Uncle Mike, I was just looking up your book on Amazon to get a current price quote for our listeners. And apparently that's a popular title with former football players, because Tiki Barber has a kid's book called Go Long, and then Jerry Rice's autobiography is called Go Long. I didn't realize that. So you have some title competition there in the Amazon store, sir.
Well, I mean, with that, we're involved in a lawsuit with both Tiki and Jerry, so they'll be hearing from our attorneys.
That's the best way I found to make money on a book, is just to sue other people rather than trying to sell copies.
Just kidding, of course. I have nothing but the greatest level of respect for both those men.
All right. And with that said, it's time for us to roll right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block. Like the name implies, this is the portion of the show where we break down what's moving, what's shaking for the week to come into the weekend, what we're keeping an eye on, of course, as the weekend approaches and the new trading week begins. Uncle Mike, we're getting down to it, so we'll dive in really quick. What do you keep an eye on for the rest of this week into the old weekend?
Seeing if we can hold the 2120 level overnight on SPX. I think that if we do, and towards sometime tomorrow, I will be adding deltas. So that's probably the main thing with which I'm watching. And I don't have any specific numbers that I'm analyzing or anything on TLT, but just watching to see if that continues to go down in price. It's definitely an interesting market, to say the least.
So you say adding deltas, you're going to load up on some calls, you're going to do some of your short put spreads that I know you like a lot. What's your go-to adding deltas to the S&P strategy?
Good question. Right now, as we gained value on SPY recently, to kind of, instead of doing a covered call on my long call, or on the stock with which on SPY underlying that we own with a hedged put, along with our long call, a lot of times I would just simply sell a call on the upside. This time I elected to go with a put calendar spread, just because of the fact that there's not a lot of premium in the call world these days. And so right now I'm in the June week 1, May week 4, 208 put spread. Long the June week 1, short the May week 4. And so at this stage, I think it's down like maybe 7 or 8 cents, something like that. And so what I'm looking to do on this is possibly roll up the 208 put and for the May week 4, and possibly get more aggressive on the short put side of it, and possibly turn that into a short bull put spread, perhaps. So what I'm going to do, I don't know yet, but tomorrow is going to be a busy day for me analyzing which move would be the best, but very likely not going to be selling any short call premium.
Interesting stuff. You just can't get your stuff called away. Unless it sounds like Apple. It sounds like you had a lot of it called away and you're okay with that, which is interesting. I think we'll get into that more perhaps next week and some of the thought process behind that. But unfortunately, that's all the time we have for the Around the Block segment. It's also all the time we have for this episode of the Option Block. But before we go, as always, let me check in with each of my cohorts here, and it's pretty much one cohort today. So, Uncle Mike, what's cooking in your neck of the woods? What's cooking in the land of RCM Wealth Advisors / Futures / Alternatives?
Calling all hedge funds. At RCM Wealth Advisors, we have near $100 million of assets under management. Because we have that much money under management, we get a very beneficial commission rate from both TD Ameritrade as well as Interactive Brokers. We actually have we have millions of dollars in hedge funds assets that use our commission rate. And we charge a fee, and what we provide is, number one, a lower commission rate, and number two, advice if called upon and if needed. So if that's something, if you're a hedge fund out there, if you're a startup hedge fund with $1 to $4 million and you trade a lot, or you're just looking for guidance, any of those things, we feel that it's something to where we can save people money on commissions if it's in the right trading frequency. And we have the ability to provide advice if called upon to do so. So if that's something with which you're interested in, give me a call, 312-212-3531, or send me an email, mtusa@rcmfs.com.
There you go, listeners. Don't just set up an account with him, but have your hedge fund bring their accounts over to RCM. Take advantage of those commission rates and maybe pick Uncle Mike's brain every now and then for how to roll those near-term put spreads or how to not write a covered call on your bullish SPY portfolio. All right, and they couldn't make it today, but of course, let me give them a quick plug for the boys over there at optionpit.com. So if I'm over there, check out their many, many webinars, their many, many other classes and things they have cooking over there. I'm sure you'll find something that you're going to like. And on behalf of those guys who couldn't be here, as well as Uncle Mike and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for everybody who wrote in with such great questions, keep them coming. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.